friends, let's take a look at Chainlink together. Thanks very much for tuning in today. I'm Rocky Outcrop. I do daily technical analysis for Chainlink and Tezos, Ethereum, and Bitcoin in all 4 separate videos. And maybe you might benefit from looking at some of that and subscribing to the channel. Who knows? I really appreciate you tuning in today, though, at the very least. And let's just see. Let's just have a wee look at the charts together. We'll look at Link versus Bitcoin and follow that up with a look at Link versus the US dollar. As you can see on both of these charts, we've had a bit of a little sort of a rolling over effect happening at the top here, and that's not too much to be surprised about. As you can see here, looking at the Bitcoin pair, and we came in, we filled the golden pocket area, and then we had a turnaround in the prices. Came down pretty close to the 50% retrace, the one down from the 618, and we've seen the prices kind of, maybe be supported by them there. I'd like to see the prices manage to stay above the 45,000, as we spoke about in yesterday's video, and avoid going down towards the 40. To low 44,000, because as we say in so many videos, I'll just get out a fib retracement here just to show you. If you drag this up here, body to body, it's no surprise that the 236, which would create a valid Fibonacci retracement to the downside, comes in at around about the same level, because of the distance apart and the way that these things work in terms of maths and Fibonacci, or math if you're American. And whatever, you can draw it up here. You can see if I go wick to wick, that is right here straddling that other one. So that's not a surprise to anybody, I'm sure, in the world. And that's why there's so often such a sort of, although it's not predictable, they're not inherently predictable, that it is actually somewhat possible to manage your risk and predict levels, or to see levels at which you might think to yourself, right, okay, my trade setup is now proven to myself to be wrong, or at least it's gone outside of my risk parameters, and I'm going to cut it short at the minute now, or whatever, etc., etc. Or this is an area where I could get in at. And I'm not a financial advisor, I know it's financial advice, but you might have been thinking to yourself, like at the 45,000, at the 40, at the inner, as it was coming down here to underneath 45,000, you might have thought, well, it's underneath 45,000. I can manage a long here with relatively little risk. That if I stop out at, if it drops below 44,000, and just use that as my tolerance on risk here, or whatever, as opposed to some percentage or some fixed number, but sort of a more sort of market-based approach. And then and then you would have seen the prices come up above 50,000. In fact, I've got to gone all the way up to almost up to 46,000, and you might have been taking profit, somewhere there, having had the sort of the 1,000 Satoshi move. Who knows? Whatever you suit you with your trading. But this is how you can look at these sorts of things. Currently, we're just on the way doing what we've been doing before. Everything, as we've said before in all the previous episodes with the oscillators and everything, all remains the same. This is just us kind of finding our feet for a higher low. The higher low indeed could come in all the way down as low as 43,000, where the 382 is here on this particular Fibonacci. And of course, that would be going down past the 50% and possibly the golden pocket on this other Fibonacci that I'd drawn in a moment ago. But we can cross those bridges when we come to them. Those are the immediate sort of levels that we're looking at. Here on this chart, you can see that we've been supported by the 786 Fibonacci retracement here on this one. This is the all-time highs and lows Fibonacci retracements there. So, that's a good area to be at. Having already previously gone up and touched the 886, as we spoke about, would be a good profit-taking target, which, obviously people who subscribe to the channel who are trading this, and doing that on an proactively trading this, would, of course, taking profit at those levels. I'm not a financial advisor, none of this financial advice, but, that level speaks for itself. Doesn't need me to be pointing out too much, although I did several times. And then, of course, the same concept with this finding the support in around this 786 area comes in at just in here, and we're talking sort of the 430 area, or whatever, for hoping the prices stay above them. Now, of course, we are still looking for a higher low, and of course, you could also short this as well if it does drop down below there. The simple profit-taking targets in mind, the first two obvious ones being $4 and sort of 10 cents area where the 21 EMA is, or indeed this upward sloping support line here, which could offer up a quite easy target for a higher low to come in at, which could be $4, which is a nice round number as well, which has got sort of implicit confluence as well with that sort of a thing. Dropping down below there, I think it'd be fairly realistic to look towards the 370 area, coming up towards this top here and actually making it above the 886 and trying up here at 467. Then I think that it's fairly realistic at that stage to be looking again for some sort of like move up the way, and this would be the full measure move. It'd take you up to $5.26. Now, I'm not a fan of saying this. The textbooks call them minimum measure moves. I call them maximum measured moves. It just reduces the FOMO and the greed and keeps you on the right side of trading. An analyst would say it's a minimum measured move, and a trader, I think, would talk about it in terms of being, just like, that's greedy looking up there. Sure, when there's various things like $5 is a round number where the previous wick highs were coming in at, you could expect to see some profit taking coming in there, and you could de-risk slightly as well if you were to be pushing up as high as that. And there's various other things, just even the bodies here at 472 could be the next area and stuff like that we look to, and the 886 again as well would still potentially act as a resistance level. So that's even before we've even started to sort of challenge this in terms of breaking out. We don't really have a higher low coming in here. So things could go up here. If they went up here, it'd be quite parabolic, and I would expect a significant retrace there afterwards, perhaps. As we've seen in the past with this parabolic type movement that we saw from the 26th of February up until the 4th of March, where prices went very rapidly from $3.50 odd cents all the way up to $5. Then you got a significant retracement thereafter. So I'd prefer to see it happen more organically. But what are you going to do? I mean, if it wants to, it wants to. If we go up to the 2-day time frame, then maybe we see some other sort of areas or the weekly time frame. In fact, the weekly time frames where we can see the other areas. It's 450 again here, as you can see, is going to be operating as the previous weekly high there. So we want to see that the prices in terms of over the period of the next week or two, getting a weekly close in above this area in order to maintain the upward weekly trend line. We've been talking about this quite a while. They've just got this on the weekly. Now we've just got the first red dot, by the way, here, the 50 simple. So there's now enough data on here to have one red dot with a 50 simple weekly moving average here. So this is just a reminder. This is a relatively nascent asset. Of course, this is on an exchange which has got less history on it, and you can see over here in a different exchange that there's more history here. But it's still the same sort of general idea. Look at how things panned out. Then shall we look at how things panned out in the past compared to our previous technical analysis when we said there was this ascending triangle operating in here is amongst all of this, and the talking about things now. Textbooks call them minimum measured moves. Just want to reiterate this. On the channel, we call them maximum measured moves. You can see the reason why. Of course, as we're saying there before, that there's still the possibility, of going up here and taking this. But I think that this is a fairly decent demonstration right here. Just doing this live. It wasn't like I planned that out. This is just the way that things worked out. No big coincidence really to me. That's why it's easy for me to talk about it smoothly. But you can see here, that's why we call these things maximum measured moves, right? I think that demonstrates everything for us for today. For Link, that's good enough video for me in my mind. Diminishing volume continues. We've gone past the biggest nodes here. We're at the current last area of a decent sized node before things start to drop off again. Just here you can see a drop off just above us, maybe a little bit of an uptake again at where we saw our previous highs at 470 like we were talking about, and then of course you could be off to the races thereafter. We've got this horizontal line up here. I'd say that's probably the next area to look to then, in terms of just respecting the work that we've put in the past, and we'll call that 485. Thanks so much for tuning in. I'll catch you in the next episode. Share this episode with a friend if you've got one that you think would like it. Check out the Bitcoin video if you want to learn about the Dunning-Kruger effect, which might explain some of the might answer some of the questions that you have about how inept people are able to be confident about things, and also give you a little bit of insight into maybe why, after having gained more experience trading, you might have actually lost a little bit of confidence really, or something like that, and that's maybe something that might benefit you in general terms. But anyway, all the best. Hope you're having a great day. Hope you have a fantastic whatever. I'll just catch you next time. Thanks very much for tuning in. Like and subscribe and all that good stuff. Catch you later.